Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of Christ Church Radio. My name is Ayodeji Ebo, an investment professional. This week, the focus is on the FGN 2020 budget performance and high cost of governance. The federal government presented its preliminary 2020 budget performance last week during the public presentation of the 2021 FGN budget. A detailed production on the breakdown of the 2021 proposed FGN budget was delivered a few months ago and available on the YouTube channel if interested. The essence of reviewing the 2020 budget performance is to help us understand how the actual budget can sometimes differ from the approved budget. 1. The federal government attained 73% or 3.9 trillion naira of its revenue target of 5.4 trillion naira, which was 13.2% lower than the 2019 actual revenue of 4.5 trillion naira. This is despite the impressive performance of oil revenue, which came in at 1.6 trillion naira, 57% higher than the target of 1 trillion naira. The strong performance in oil revenue can be linked to improved global oil prices and oil production that average at $43 per barrel and 1.79 million barrels per day in 2020 relative to the revised 2020 budget of $25 per barrel and 1.8 million barrels per day respectively. Also, the devaluation of the exchange rate from 316 naira to $1 to 379 naira to $1 boosted the naira revenue from oil. 2. On the other hand, non-oil revenue, that is revenue from company income tax, value-added tax, customs revenue, and federal government levies all suffered significantly with a shortfall of 21% or 348 billion naira to miss the 1.6 trillion target. The federal government independent revenue, that is targeted revenue from ministry, departments, and agencies, sustained its poor form with a 44% or 413 billion naira shortfall. Despite not meeting the 932 billion naira target in 2020, the federal government plans to raise about 1 trillion naira from independent revenue in 2021. 3. Despite the missed revenue targets, the federal government exceeded its planned expenditure by 100 billion naira to 10.01 trillion naira against the approved budget of 9.79 trillion naira. Personnel cost and debt service accounted for 31.6% and 32.4% of the total expenditure. As a result, the personnel cost and debt service as a proportion of actual revenue stood at 81% and 83% respectively. These ratios must be reduced gradually over time. This clearly shows that Nigeria's debt expansion is unsustainable and should be curtailed by seeking other options to fund capital projects. Also, governance costs remain too expensive and unsustainable, with less than 5% of the population spending over 80% of the country's revenue. This means that Nigeria will continue to struggle to fund capital expenditure, which affects the larger population and supports economic activities. 4. Due to the revenue shortfall and huge expenditure, budget deficit rose to 6.1 trillion naira in 2020 compared to the approved 5.4 trillion naira. CBN came to the rescue again with 2.9 trillion naira through what is called ways and means financing. Ways and means financing is basically the CBN printing money to enable the federal government to plug its budget deficit. This breaches the CBN Act of 2007 that states ways and means advances shall continue to be available to the federal government to finance deficit in its budgetary operations to a maximum of 5% of the previous year's actual collected revenue. This may also be responsible for the high inflation in the economy, as this will increase money supply. While 2020 was a year characterized by severe economic challenges due to the COVID-19 pandemic, the budget performance trend was not significantly different from the past years. Thank you for listening. Please join us same time next week for another exciting and insightful session. For comments and feedback, kindly forward to ccradio@rccgchristchurch.org or send SMS to 07082463747. Stay blessed.